I realized that a lot of people don't have experience with competition in the ETF space. People don't know exactly how things work. People don't understand how competition works in this space. And I wanted to basically just run through a few things and go through exactly how competition in the space works, and what that could mean for ETF providers, what that could mean for the market, what that could mean for ultimately you and I, who are sitting here on the receiving end of this absolute war that's going to play out in the Bitcoin space. And this has started to happen a lot sooner than I even thought, and I'm going to cover that in a second, because I put a prediction out of what the ETF fees would be between this cycle and the next cycle, and then Fidelity just came out and basically said, British HODL, get fucked, and we're here to play, right? They came out swinging like I wasn't expecting them to swing. And so I want to talk through a little bit about this and what's going on, and why it's terrifying, and why it's scary, and what it could mean for the market as we move forward. The thing that's quite interesting here is that, well, firstly, please subscribe, because you have to help me spank the YouTube algorithm to get Bitcoin content out in front of people before this is too late. These guys are not playing around. These changes that have happened in the last couple of days, they are not playing around. The SEC is not playing around. This is coming, and it is going to be too late at some point for some people. So please help me get this message out there so people understand exactly what is going on here. So there's a few ways. If you're an ETF provider, there is a few ways that you can compete with other ETF providers in the space. This is why generally over time, but then there's not that many, right? There's not that many ways that you can compete. This is why generally over time you see the options go from 10 down to 7 down to 4, and then there's like the winners at the end that will last over a period of a few decades. So there's only a few things that they can do to compete, right? Number one is that they can, and I want to go through the list here so you understand exactly how a BlackRock competes with a Fidelity. And of course, they're going to have their loyal clients. I'm not talking about them. I'm talking about all the money that is up for play, because there's obviously going to be a certain amount of money that's just not up for play, and that's fine. That's their locked-in capital that they have that's secured. And then there's the money that is locked up for play. And I'm even talking about your money and my money, right? Because we are retail clients. An ETF is a retail product. And so, they're going to be competing for my money and your money too. And they certainly don't, imagine what it looks like when you get together on the golf course or wherever you get together. At the sacrificial ceremonies, as according to the Illuminati fans. Imagine you get there, right, and then you got to tell someone, hey, we're BlackRock, but we've only got $10 billion in our fund, and the guy from Fidelity or the girl from Fidelity says, yeah, we've got $14 billion in our Bitcoin fund. It's a big dick swinging competition, right? And in order to win the dick swinging competition, they've only got a few tools in their armory, and you bet your ass they're going to press the advantage of them, which is why it's important for you to know this now and get to one Bitcoin at this point. So the first thing that they can do to compete is provide an innovative product, right? You can offer a unique spin on the underlying product, and that's going to give you a unique opportunity within the space. That's really evened out here, because at the end of the day, you've got the way that, so for example, all of these ETFs are going to be cash create ETFs, and if you don't understand the difference between that, go watch my video on the difference between that. But there's two types of ETFs, cash creates, in kind, right? So if another ETF, let's say 3 years later was to come out and it's going to be an in-kind ETF, that now has a competitive difference compared to the cash creates. But all of these are going to be cash creates. The playing field is going to be completely level here. And so how do you attract, what is the innovation that they can do? The choice is really who's custodying the Bitcoin. Do you want Fidelity to custody it? Do you want Coinbase to custody it? There's not much level of innovation, because the industry standard is applied to both Fidelity and Coinbase in this scenario as far as the custodians go. So can't really compete on the first point, which is the innovation around the product, right? Number two, I'm going to come back to right at the end. Number three is marketing and branding, right? That's the only way. Like, some people may want to invest in a BlackRock fund because it's BlackRock, right? They might feel that if they're investing in a BlackRock fund, they feel better about themselves, or the marketing is better, or BlackRock, is more aligned to their personal goals, etc., etc., etc. They trust the branding of BlackRock, the institution of BlackRock, etc., etc. And then you got the Fidelity fans, the people that love Fidelity, and they can compete on that, right? Now, number four on the list is they can compete through education and resources. As you can see here, as I'm going through this list, there's not going to be much that they can compete on here, right? There's not going to be much that they can get in the ring and start swinging at each other on here. It's all pretty much the same, and that's what you want for an institutionalized product. You don't want institutionalized products being so drastically different. You want them to be you want almost the exact same, and then you can decide based on a couple of levers that they can pull. So number four is education and resources. You are definitely going to see these companies sponsor YouTube channels, sponsor advertising on radio, sponsor advertising on Google ads, sponsor advertising on Facebook ads, sponsor advertising at the airport like GBTC is doing already. There's going to be, education that happens around these. They're going to sponsor seminars. They're going to sponsor people to educate people on what Bitcoin is, because then the relationship that you build with the client is, hey, this person taught me about Bitcoin, therefore I'm going to invest in their fund, right? Then number five is performance and track record, right? Because if you've got a fund that generates X% and I've got a fund that generates X plus 3%, then that you can't really compete on that because it's the same underlying asset. And then number six is access and distribution, right? So that's the one area where somebody like BlackRock or Fidelity could have an advantage, but the market, because of the ETFs, has been democratized so much, you can't really compete on access and distribution, because as soon as you launch it, it's pretty much available everywhere. Plus, if you've got two behemoths like BlackRock and Fidelity going at it, really, and Grayscale in this scenario, like, it's going to be there, right? Like, there's no real advantage to having a BlackRock fund, because most people are going to be using a Fidelity broker account or Charles Schwab broker account or an Interactive Brokers broker account. So there's no real advantage for having access and distribution of one company over the other, because they're going to have access and distribution across all platforms. Number seven is partnerships and collaborations. So BlackRock could team up with a mutual fund provider and be the education and resources, and then the manager of that retirement fund puts that capital into BlackRock's fund. But that's really already set up, right? These are relationships that are already set up. This is not a new thing. If anything, the new companies like Grayscale and whatever will have to compete to enter this market. But as far as like truly competing, this is already tied up. They've had partnerships and collaborations forever. So for example, if Grayscale went and sponsored the NFL, and that guaranteed that, this is just for happenstance, right? I'm not saying it works like this, but they went and sponsored the NFL, and they basically said any one of your players that wants to invest in Bitcoin, they can do it through the Grayscale fund. That would be a partnership and a collaboration, something like that they could set up. Number 8 is customer service, right? So offering like customer support. But the problem is, this is a retail product that people are going to go into their broker account and buy. So there's very little customer service to do. Of course, they need to train their advisors so that when a client, if their client is still old school, calls them up, they know how to deal with that person. And they're going to be investing millions of dollars into the customer service and training their people to make sure that their advisors actually know what the fuck they're talking about. Because the worst thing you want is that you call your advisor at Fidelity and this guy, British HODL, knows more about the Bitcoin ETF than your advisor at Fidelity or BlackRock, right? That's a very common thing. You might think that's crazy, but that's extremely common, right? I probably, at this moment in time, outside of maybe 50 people at BlackRock, can do a better job at selling the BlackRock ETF than any of their advisors, because they still have yet to be trained on how to sell. Right? And the advantage to me for that one is probably going to be Grayscale, because they're the ones that have had this domain expertise, right? Whoever the Grayscale advisors are going to have domain expertise over this. Like BlackRock and Fidelity and all these guys are going to be competing to get their advisors up to point to be able to talk to the type of people that they want them to talk to. Because remember, imagine if your Fidelity advisor calls you up who's been telling you about stocks, equities, this, that, and the other, and then now starts telling you, or bonds, and now starts telling you about Bitcoin. And you ask a question that you hear on a British HODL video, and that person can't answer the question. So the only thing that they're really telling you is the opportunity is great, but they cannot actually get you to interested in the fund. So this is where the customer service element comes in. Because then if a Grayscale advisor calls you up and you ask the question, and they know the answer to it, they're going to have competition from that side of it. So that's extremely important. Number 9 is regulatory compliance, which isn't, you could say, okay, BlackRock has a huge advantage because of their regulatory arm of their organization, because of how big it is. But that's not it, because the underlying asset is the exact same. It's not really going to offer any huge advantage for one over the other, because the underlying asset is still moving forward, right? And it's the game theory of it. Like every single firm is going to be using their lean when it comes to politics to get positive Bitcoin regulation out there so that more funds come into the ETF. Number 10 is technology and innovation, right? Like if they can have trading efficiency, execution efficiency, etc., in the product, then that might give them a competitive advantage. But every single person is going to be working on that, and Coinbase is the majority of the executioner and the custodian on most of these ETFs, which takes me all the way back to point number 2 on the list, which I skipped over, right? This is the ways that ETFs compete with each other. You and I are not supposed to know this, right? This is just how they compete in the subtle background. BlackRock's never going to come out and say Fidelity shit. What they're going to do is invest in training their advisors, so when you speak to a Fidelity or a BlackRock advisor, the BlackRock advisor actually knows what the fuck they're talking about compared to the Fidelity advisor, right? So that's really how they compete. They might say, oh, we have the ability to, to give you X amount of resources on education compared to that company. That's how they compete, right? It's very, very subtle. It's very, very gentlemanly like competition, which is what we have in the United Kingdom. I believe it was invented there. And so that's what's going to happen. But point number 2 is quite important, and that is competitive fees, right? And this takes me on to exactly what has happened over the last few days here. So every one of the providers has filed their updated S1s. Grayscale has also updated its paperwork from being an in-kind to a cash creates, which means everyone's bent the knee at this point. And I told you this was going to happen when BlackRock bent the knee. So that's happened now. And now we're starting to see what fees these funds are going to charge. And I'm shocked because Fidelity has come in swinging. Fidelity has, because really out of that entire top 10 list, like there is not really much they can compete on, because how do you compete when the underlying asset is exactly the same thing? Right? There's only really one lever of competition that you have, especially when you're trying to attract big money, because big money is going to be focused on the compounded effect of the fees. So I thought that we were going to see like 0.5% and higher for this cycle, and then it would drop down for the next cycle. Oh, no. Fidelity must have seen my tweet and basically said, screw that. We're going to start swinging right now. You want to play in the 800-pound gorilla cage? You want to have a cage match against John Jones? Let's play. Let's see if you've got this. You see if you've got what it takes to play. And Fidelity has come in and basically said their expense ratio is going to be 0.39%. Just to tell you how much and how strategically they're thinking here. GLD, the gold ETF, is 0.4%. So they are undercutting gold to send a message. Whoever is doing the thinking around all of this, whichever team is doing the thinking at Fidelity regarding what numbers to pick here and how to announce this and all this other stuff, is amazing. So bravo to, hopefully some of the Fidelity people are watching, because you guys are doing an amazing job here. So you got Fidelity, one of the best, most reputable asset managers in the entire world, coming in with the lowest fee structure of 0.39%, and even not only undercutting everyone else, but even undercutting GLD to send a message to gold and all of the gold investors. So if you're a GLD holder and you're looking at this going, wait a second, I can pay a lower fee, right? And I've got an asset that can compound at 50 to 80%, while gold has just continued to be an impotent asset no matter what the experts tell me. Great. Sell GLD, buy the Fidelity Bitcoin fund. Now, here's what's going to happen, I predict, over the next, between now and approval and trading day. I predict all of these companies are going to start competing against this Fidelity number. They're all going to start either matching it, lowering it, or coming closer to just above it. I don't think Grayscale will get this low. I think Grayscale is probably going to take a misstep here because they don't understand the importance of this. And they're going to... I'll be very, very impressed if Grayscale come out and say, we're going to match Fidelity's fee. That would be extremely intelligent thinking. Because right now, GBTC makes 2% a year, right? So they've got to lower their fee down to 0.39%. That's taking a big haircut, but that's the only way they can compete. Otherwise, what I predict is going to happen is that those people that don't have to take a tax hit will sell on day one, come out of GBTC, and go straight into the Fidelity fund, because I can cut down my fee by 1% or whatever GBTC's fee turns out to be. So the fee game is the competition. This is where the war is. And Fidelity has come out absolutely swinging here. This is happening a full cycle earlier than I thought it was going to happen. They are ready to go. They're not playing around here. This is not, oh, let's launch the product, let's innovate, let's see what happens, let's do this, let's do that. No. Fidelity's taking a swing here at everyone. And do you think BlackRock's going to sit there and not answer it? I reckon BlackRock's going to lower their fee to match Fidelity's at a minimum. That's what I think will happen by trading day. I think all of these are and just to put it into perspective, Galaxy has come out and said there will be zero fee for the first 6 months. They've not. I can't find any information on what happens after that 6 months. But Galaxy has said there'll be zero fee to own their Bitcoin ETF for the first 6 months, right? And they're making a smart choice, because if they get a bunch of capital in there and the price of Bitcoin goes up, now I got a tax liability, so I'm not going to sell it. I'm just going to hold on to that Invesco asset or the Galaxy fund, and I'm not going to bother selling it at that point. So they understand. Whoever's at Galaxy also understands what a blow Fidelity has just given everyone, right? This is an extremely dangerous move for all of the other ETF providers, but this is what war is. This is how it's going to work. They don't have much to compete on. And Fidelity has basically said, take this 10-foot dick and hit it round your head, right? So now what you're going to see is this war is going to heat up a lot faster than I thought. So you and I need to get to the point where we are at least at 1 Bitcoin. We are not slowing up on our acquisition of the Bitcoin that we need, because these guys are not playing. These guys are not playing. Now that you've got a 0.39% annual fee, this now turns into a real war, and every other ETF provider is going to be coming in here trying to compete against Fidelity here. And I predict BlackRock will be the first one to match it, if not go underneath it. And yeah, I would be very proud if Grayscale does the same thing. Grayscale deserves it, but I just think they're going to make a misstep, and I don't know if they'll do it or not. I certainly don't have the confidence to say that. I think Grayscale will remain at around 1%. I think they'll lower it from 2 to 1. Anything higher than 1 is going to be a joke. And that would guarantee outflows from GBTC. But I think they'll go at around 1% and then lower it later on in the future. But Fidelity, man, I'm extremely happy to see this. The war has begun. You're sitting there watching this, letting this opportunity over Christmas and New Year's to acquire your 1 Bitcoin out of the system go to waste, while Fidelity has got their entire team of lawyers that are a hungry pack of wolves smelling blood out here thinking about how to screw everybody else and acquire as much Bitcoin into their fund as possible starting day 1. Not starting year number 2, starting day one. So this is what's happening here. It's getting dangerous. If you're not at one Bitcoin, you are going to regret this. Whether you are talking about regretting this, on the day of launch, I don't know, but you are definitely going to regret this over the next 5, 10, 15 years, and your children will regret it, because the way this is being set up, it's basically 5 years ahead of what I was saying was going to happen, right? They're willing to compete on the fees right now when I thought that would happen in the next cycle. So this is getting absolutely serious. If you're sitting there over New Year's, Christmas, and being happy and you're not at one Bitcoin yet, you're fucking wasting time. You need this. Understand how serious this is. Understand how far they're willing to go. Fidelity could have launched this fund with double the fee and everyone still would have been extremely happy with it, but they didn't. They told everyone, we're going to play the long game. We're going to take 0.39%. We're going to undercut everyone, and we're going to undercut GLD, and we're going to start educating people on why Bitcoin is better than gold. And all of us retail people are sitting here going, hey, let me enjoy Christmas and New Year's while Fidelity's coming for the entire market. You need to take this more seriously than everyone is taking it. Follow what's going on, and trust me, if you're a Bitcoiner already, your New Year's Eve is not tomorrow night. Your New Year's Eve is whenever this ETF gets approved, 8th, 9th, or 10th. I'm not celebrating New Year's Eve until January 8th, January 9th, or January 10th, or whenever this ETF is approved, because there's no value in it. Right now, I need to be focused on how do I acquire as much Bitcoin as possible, which is what I've been doing. I've been pressing all the levers that I can to acquire as much Bitcoin as possible, despite what happens to the price between approval and trading, because that is the mission, and Fidelity's proving it. Fidelity is focused on the mission better than you are, because Fidelity doesn't want to let down its progeny. But despite all of that, there's still only ever 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy.